circuit breaker has been lifted yesterday. How do you all find it? Actually, how many of you are still working from home, or how many of you are already back in office? I went out for my walk yesterday morning, and I'm a bit not used to the noise. But of course, it's happy noise that I hear because I believe many people are already out there. So now we are in phase 1 of the reopening. Despite, yes, we can go out a bit more, but continue to stay safe. Wear mask when you go out, but don't go out too often. If you are bored, every 2 weeks on Wednesday evening, stay at home, join us for our Grey Rhino Show. Okay? Just want to ask, for those who join us for episode 2, actually, how many of you enjoyed the Kahoot game that we had at the end of the show? Can I maybe have some participation? Oh, William is still working from office. So who actually enjoyed the Kahoot show that we had during the last session? Remember the game where the fastest finger win? Okay, William, we sing, Siu Heng. Oh, okay. Quite a number of you, yeah? Okay, thank you very much. I received very good feedback about the game. Because for Grey Rhino Show, yes, we want the session to be informative, but at the same time, we also want to have edutainment. So it's educational and yet entertaining at the same time. But actually today we are not going to have it. Let me just share with you first. Don't be too disappointed. It's being replaced by something that is more exciting, because I mentioned for the past 2 episodes, and I was very apologetic that we were not able to answer a lot of the questions. So this time round, we have decided to have a longer session for Q&A. And what we did is that we actually compiled. Okay, so we have received a whole list of questions, right? Be it during the registration or during the session itself, because some of you actually keyed in the question that you hope to be answered, but past 2 sessions, due to time constraint, we were not able to do that. So this time round, we are going to have a longer session. And if you don't remember, for the past 2 sessions, I was the one who decided which question to be answered. You know why? Because people always tell me, woman is always right. Therefore, I'm tasked to choose the question. But after the last session, I realized men can also be right. Therefore, today I'm going to open up the choice of question. Okay, that means which question to be answered today, that will be in your hand. But of course, in Grey Rhino Show, actually, we are not here to debate about which investment is right or which investment is wrong. Because like, for example, for the last case study that we had on DBS, I actually received a lot of questions asking, is DBS a good bank to invest in? Is OCBC a good bank to invest in? And then the list of the banks, right, just go on and on. If you don't remember, when Kikvi shared with you about the analysis of DBS as a business, he shared about the pros and cons. He did not mention, no, you should not invest in DBS. He didn't say that. He just mentioned that personally, it's not a company that he would invest in at this current juncture. So it doesn't mean that for people who invest in DBS, that's a bad choice. Therefore, just like I mentioned, we are not here to discuss or debate about which is the right investment or which is the wrong investment, but rather through this show, what we hope to achieve is that through discussion, meaningful discussion, we are able to build. We can discuss about some philosophy, build the philosophy, develop methodology, and then eventually build an investing framework that can help us to make wise decisions. That will be something that we will be happy as an outcome of this show. Of course, you'll be happier if after attending this session, you are so happy and you find this show so meaningful that you can help us to invite more friends and increase our viewership. Okay, so just like I mentioned, today you'll have a choice to be the decision maker as to which question to be answered, right? So what I'm going to do is that there's going to be a polling now. There's a total of 5 questions. You can choose one question, which is your favorite question that you hope to be addressed to today. So later in the Q&A session, we will start from the most popular question. Okay, we will answer that and we will do our best to answer 5. Okay. Meanwhile, later during the session, okay, so now what you see is the Q&A. I will give you just 30 seconds to read through. Choose your vote. Okay. I hope you have all made your choice. Now, can we take a look at the polling result? Okay, let's see the top question. So the favorite question to be answered today, based on all of your vote, how do you know when market has recovered? What are the indicators? Okay, that has gotten 45%, followed by are REITs a good investment now, since stock price is so low and attractive with consistent dividend given? And then third question will be, what are the chances that 23rd March is the trough of this crisis? Otherwise, why is the market, especially US, so pessimistic? Followed by the Fed's monetary policies this time round. How will it affect the valuation of stocks? And SIA investment outlook is the last. Okay, thank you very much for your participation. So just now I was saying, later in the session, if you do have any questions that you want to ask, you can still key in via the chat feature on the top right-hand corner of your screen. Seek your cooperation when you key in the message, right? Because for the benefits of all the participation, actually when you key in the message, it will be good if you can key in to all panelists. Okay, instead of maybe just to myself, yeah, so that everyone can take a look what are the questions to be asked. So the 5 questions you saw just now is actually the 5 questions from the last 2 sessions. So for the questions that's being keyed in today, okay, if it's going to be answered because it's being chosen, it's going to be the next session. Okay, so do join us on our bi-weekly series of Grey Rhino. Okay, just now I saw a comment by Rinaldi, long question, so short time. I'm so sorry. I'll take note. This is the first time I'm doing this, so I will manage the time better. Thank you very much for your feedback. Thank you, Rinaldi. Okay, so without further ado, let me invite our speaker for today, Kate Wee. So same thing, he'll be going through with you the economic outlook and then a market outlook. And today we are going to have a new case study on ST engineering. Okay, shall we welcome Kate Wee?
Okay, thanks, Shireen. A very good evening to everyone, and I'm very happy to be with you all again, every fortnight. Okay, today for ST engineering, I won't be covering everything, so we just go through the first part, which is more on the financials part. Okay, so the second part I will leave it to the next session, because I think the first part what I'm going to share will be quite important. Okay, let me go into it immediately. Okay, if you see this scene, what would you do if the shoreline recedes like that? Okay, so it's actually the shoreline, where the sea has retreated, and then a lot of this, the mud will actually, or the seabed is actually being exposed. What would you do? If you are standing at the beach looking at this scene? William says run. Okay, run to high ground, Mr. Assad. Okay, in fact, this was a scene in 2004, where we had this one of the largest tsunamis, in history, that happened it was in the Indian Ocean, and then affected many places, and the chief area it hit was Indonesia, especially Aceh. So it was actually in this tsunami, 230,000 people were killed, in this tsunami, and where is the main impact in Aceh. Can you imagine the waves were 30-meter high? Just take a while to imagine that, a 30-meter high wave coming onto the shore in Aceh. So that actually destroyed a lot of properties, and it actually also killed a lot of people because of the pressure of the water. Okay, let me show you a short video. Actually, how does it look like? Okay, so that's how a tsunami looks like, right? Where actually the water retreated and then it comes as a series of tidal waves. Of course, I did a research, not every time where the shoreline recedes, it's a tsunami. Okay, but I think if it's such a strange sign, then I think we better be prepared. What has it got to do with what I want to share today? Okay, so my question is the shoreline also receding in the financial markets? That means you look at the financial market today, is there anything unusual, just like the beach, where suddenly the sea receded? And my answer is a yes. People who have joined us previously, I shared about that. But let me just touch on it again, because I think it's important to be looking at it. So this receding shoreline is in the form of a massive divergence between the financial market and the economy, which is still ongoing. Okay, so let's look at this graph first. This chart stands for the OECD Composite Leading Indicator. Okay, what is this? It's a leading indicator. So that means actually this indicator, in fact, leads the economy. And in the past, for most of the times, it actually preceded the stock market as well. So if you can see, the current drop in the economy, today it has matched the size in the depth of the 2009 crisis. And yet it has not ended. Okay, so this is not a small economic downturn. It's a big economic downturn, right? It's already at matching the size of 2009, but it has not ended yet. Okay, this is just to let you know the seriousness of this economic downturn. Okay, let's take a look. So on the left side is the same composite leading indicator, but over a shorter span of time. I just use the window from 1st January 2019 to April. April is the latest updates from OECD, the CLI, Composite Leading Indicator. So they have not come up with the May one. Okay, so this is how it's looked. On the right side is the MSCI All World Index, which is a stock index representing of the whole world. Right? So just like the economy, it actually collapsed starting in February and March. However, the difference is, come 23rd of March, as I shared the last time, the stock market has rebounded. So as at the end of April, the stock market has rebounded 24%. As at today, it's rebounded about 35%. Okay, so it actually has recovered most of the lost ground from this market correction. However, bearing in mind, the economy downturn has not stopped yet. And remember, I shared what if a round 2 happened. Right? Today, already things are looking so bleak. If round 2 happened, then will the tsunami really come? I think that's a question we don't have the answer, but I think we got to be prepared. Okay, this is looking at unemployment rates in the US, right? So the unemployment rates, as you can see, this chart dates back all the way to 1950. And there has never been once where the unemployment rate has been so high. Right? So this unemployment rate still below that of the Great Depression, but probably the second highest in recent history. So it basically shot up just like a vertical line. And that number is still increasing, although at a reducing rates, but it's still increasing. Okay. So that's what we are seeing now. It's a seesaw. So people may be thinking, in fact, one of the questions is asking, why is this like that? Why is there so much optimism in the US stock markets? Okay, perhaps this slide may answer that question. Okay, so on one hand of the slide, on the left side, if you see, we are seeing a recession, like I shared with you, which has not yet ended. In the first quarter, it was annualized is down 4.8%. Of course, the worst quarter should be this quarter. The numbers are not out yet, but we shall see, maybe somewhere in July. Okay, so the recession is ongoing. Job loss is huge. Of course, now there's some optimism where there's a reopening of the economy. But whether will people re-engage without a vaccine, that is still an unknown. Yeah. However, some of those signs are there. And will there even be a round 2 where there's a spike of infection again, and hence they'll be going to a lockdown again? That's something we don't know. Yeah. However, if it does, then this recession is almost confirmed. Yeah, will be worse than the 2009 crisis. That's one. And adding to that, I think what has exacerbated in the last couple of weeks since the last time we met is actually geopolitical tension has racked up, civil tension has racked up. Okay, for example, later I will share a bit more. Yeah. So between US and China, as the picture shows here, yeah, the tension is racking up. The rhetorics between Xi Jinping and between Donald Trump, that is racking up. And also some of other civil tension that has erupted within US and also within China. And what is the other side that's balancing all this? Yeah. So in fact, everything looks bad, right? From the economy to the geopolitical tension, to how people are feeling, the confidence level. So it's all turning south. Yeah. Although there may be a glimmer of lights at the end of the tunnel, it's still too early to know what kind of light that is at the moment. But on the right side, in fact, that is what has been counteracting, as I shared with you, causing this strange phenomena, like the receding shoreline. So this strange phenomena of this great divergence is because of the money printing. So it's actually, so far the G20 has injected money of about 5 trillion, just over the last few months. 5 trillion, and that is a lot of money. So 5 trillion is injected, basically trying to flood the asset market. And most of this money does not go to the man on the streets. In fact, this money largely go to support the asset market. And this will further, I would say, cause an imbalance between the rich and the average people. So I think that is going to be more and more magnified, the rich-poor divide, because of this money printing, which the bulk of it has been channeling into the asset market, which caused an asset market, I would say, appreciation, but not much in the recovery of the actual economy. Okay, so that's what has been counterbalancing. We don't know which side may give way. So I think money printing will continue to happen. Because the Federal Reserve kind of promised that. But on the other side of the equation is really the worsening economy and the tension. Okay, some of the things that's happened in the last couple of weeks, some which is a bit sad. So you look at the one on the left side. So last week, there was a death of this person called George Floyd, in Minneapolis. So I was just watching the video just before this. What happened was this man called George Floyd, a 46-year-old African American. So he went to the shop, a bit drunk, and then he bought a cigarette, and they gave $20. After he left, the shopkeeper checked the $20 and then suspected it's actually a counterfeit $20. They went to look for him to ask back the cigarette, and then he refused to give back. And hence the shopkeeper called the police. So the first police came, and then they wanted to arrest him. So when he was, I would say, resisting a little bit, and the policeman pointed a gun at his head and then handcuffed him. And then wanted to ask him to go into the car, the back of the police car, which he kind of resisted because he said he's claustrophobic. And then the police pinned him down on the road, and one of the policemen actually knelt on his neck, for the full 9 minutes. By the time of the 4th minute, he was pleading for 16 times, that he cannot breathe. Please let him go. Please don't kneel on his neck anymore. So by the 4th minute, he was already unconscious. And I was watching the video. A lot of passerby walked by and asked the police to stop because he's not even moving. Could he even be dead? But the policeman continued to kneel on his neck for the next 5 minutes until the ambulance came. Of course, by the time the ambulance came and he rushed to the hospital, he was pronounced dead. And that caused a huge eruption of displeasure, causing a protest, which was the worst since 1960. Yeah. So actually, this is some of the outcome of this rich-poor divide. Yeah. Because the Africans or African Americans were among the poorer people in US. Yeah. And the rich-poor divide, which has been happening, plus with this COVID-19, which caused joblessness, yeah, and hence it probably drives some people to desperation. So I think it's really I think capitalism is a good thing, yeah, because it enhances innovation. However, I think how we use the money is actually also very important, yeah, because I think today we're talking about investing to make more money. How we use that money, I think, will determine the quality of our life. Jeff Bezos, the CEO of Amazon, he said, intelligence is a gift, kindness is a choice. Yeah. So it's not, if you're given that gift, it's not difficult. It's given to you. Yeah. Whether we want to choose to be kind, that is our choice. Yeah. And I won't want to share too much. But actually, one of the things I like to be sharing is really, when we make money, what do we do? Yeah. Do we use it for kindness? Yeah. Or we use it just for self-gratification? Yeah. I think that is a very important thing. Because I think in this world where the rich-poor divide is wider, I think more people are needing help. Okay, on the right side, where we have the China and Hong Kong. So China just passed a law, end of May, to say that this national security law, which is actually to kind of over time bring the legal system of Hong Kong closer to that of China. Of course, US protested, to say that that is against human rights, and there's against one country, two system. Yeah, so I think that there were a lot of exchange of rhetorics between US and China, and hence I think the tension between US and China has racked up a few notches. Yeah, and then so I think that is another geopolitical tension, which really boil over. I think today, because of the COVID, which is overshadowing all these things, I think people are not giving enough weight to all this other tension that is ongoing. So what do we do? Like what Mr. Assad shared just now. Thank you, Mr. Assad. Yeah. So he said, what to do now is to seek higher ground. Yeah. We don't know whether is it going to be a tsunami, but it's a strange sign. So I think it's a prudent of all of us to seek higher ground. What is that higher ground? I think firstly, I shared this too the last time, which is cash and gold. Of course, these are what comes to everybody's mind. Okay, well, let's keep more cash now, in case the tsunami comes. Yeah, and at least we have this cash that is protecting us. I think that's very true. And together with gold, which is also a very traditional currency. However, I think cash and gold itself, is not sufficient, right? Because if the money printing continues, in fact, cash and gold will be also washed away, by this tidal money printing. Which will wash it away via inflation. And I think it's important as well for us to be having some high quality structural growth companies. This company has a very unique characteristics, which I will show over a few case studies, short one. How they behave. For how they behave is generally when market comes down, it comes down lesser than the market. And when the market recovers, it recovers much quicker than the market. Because these are the companies which their growth does not depend on the Fed rescuing them. They are growing despite the Fed printing money or not. So it doesn't need a rescue. It's continued to growing at high rates that it's not dependent so much on the economy. So I think these are selected small handful of companies that are worth to be getting into for safety. Okay, I just use a few examples. So this is the one I shared last week, DBS. Let's look at it from the start of the year to today. Okay, so DBS has declined when the trough, it declined 35%. And today it has recovered about 19% as at yesterday. So overall, it has declined by about 22% year to date. Okay, another of this company, Singapore Airlines, which is one of the company in the polling. Okay, year to date, from the peak to the trough, it was down 44%. Okay, and when it recovered, it has recovered about 15%. Altogether, still down about 35%. Okay, common names, DBS, SIA. Capital Land, another very common Singapore name. Okay, so when it went down 35 to 32. Yeah, when it came up about 22%. Altogether, still down by about 17%. Okay, so you can see these three common companies year to date, despite the recovery, it is still below water. But let's look at some of those higher quality companies that I mentioned. The one is shared a few times. One of the example, Microsoft. Yeah, so from the start of the year, and when it dropped about 16%. And when it recovered, it actually recovered about 36%. Year to date, up 14%. Okay, so as you see, when it dropped lesser. The Singapore companies dropped about 30%, 20 to 30, whereas Microsoft dropped less than 20%. Yeah, when they recover, it recover much faster, because they are not fundamentally impacted. Okay, and another company, Cadence Design, which is actually a software company helping in industrial design. Yeah. So when it went down, slightly more than Microsoft, went down 24%. But when it recovers, it recovered 70% since the trough. And hence year to date, it is up about 30%. Okay. Let's look at one which is less of a structural growth, but a very resilient company in Singapore, Netlink Trust, okay, which is our fiber optic infrastructure. So the start of the year was 94, it dropped to a trough of 80 cents, so it dropped about 15%. And then it recovered 26%. Year to date, up 7%. Yeah, not too bad. But again, a company not fundamentally affected, highly resilient, because we don't cut off our fiber optic. I think that would be the last thing we want to cut off. We want to maintain our landline, we want to maintain our fiber optic broadband. So all these we keep, and hence the company is resilient. This is just to show you one thing. So the first thing to do is really seek for higher ground. And the higher ground, in my view, is not just cash and gold. Some of these very high quality structural growth company, I think represents higher ground. Although there will be some volatility as well. But when it drop lesser. When it recover faster. Second one is I like to talk about three bags theory. Okay, simply put it, we have three bags. The first bag, short-term needs. I think this is very crucial because job security is less certain. Yeah, and then we need to keep aside some money, just in case we are made redundant during this period or business are worse. Yeah, at least we have money to see us through for us and our family. So that needs to be kept aside. Second one, invested. Yeah, like what I shared. It could be in cash, gold. It could be in high quality equities. But just invest it. Don't worry so much about it. Okay, it's going to have some up and down. Don't worry so much. Then the third bag, I call it opportunity funds, which I encourage us to be building. Okay, I share with you what I personally am doing. Okay, so now I'm actually with my wife. We together save about $10,000 every month combined. Yeah, and on my personal basis, I continue to save up a sizable amount. On top of that, I save with my wife. Because I'm building up these opportunity funds. Just in case this receding shoreline is the precursor of a tsunami. Okay, this tsunami represents the stock market crashing together with the economy. At least I want to have ample opportunity funds to be buying into the stock market. I just give a story now. I guess all of us have had this experience before, where we were saving hard. We didn't have much money at the time when we were younger, maybe. Yeah, or some of you maybe now. Yeah, because you're looking forward, end of the year, you're going for a nice holiday. So you visualize, wow, you're going for Europe to have a nice holiday, a 1 month holiday. So every month you put aside some money. Yeah, and you visualize this money at the end of the year is going to earn you a nice holiday. And how do you feel when you put aside that money? Do you put aside that money with bitterness? Oh yeah, I got less money to spend. Or you put aside that money with joy and excitement. Wow, I put $500 aside every month, and at the end of the year, this is going to earn me a nice holiday. I guess for most people, it's the latter. Put aside money such that we can enjoy a nice holiday. Okay, this time now, I'm not talking about a holiday, but I'm talking about an opportunity, a possible opportunity to grow our funds manifold. What if I say that, every dollar that you save today, or every 100,000 that you save today, will become 900,000 10 years later? Would that give you impetus to be saving money? Every 100,000 to become 900,000. I think, when we think about it, it gives us much more impetus to be putting money aside. Of course, we can visualize how much they can grow and how much they can do for us. And I hope as it does for us, we don't forget about other people as well. Yeah. And it could be a reality. I just use Microsoft as an example again. Right. So during the last crisis, over from October 07 to March 09, it corrected by 43%. Guess if you are someone who invested at the trough of the crisis, after Microsoft has dropped 43%, what will your savings do for you? Okay, yeah, exactly. Your saving is going to grow 900%. Yeah, so your 100,000 is going to grow close to $1 million. Okay, so that is how investing in a crisis is going to do for you. I'm not saying the crisis will definitely come. I'm not saying we'll definitely revisit the low of March 2020 this year or even beyond. Yeah, but I'm saying that why not save some money aside for that possibility? Yeah, so continue to be invested, and at the same time continue to aggressively put money aside. Yeah, such that if it really comes, that money can be put to use. So I think that's something, if you happen to be served by a consultant, it's good to discuss with your consultant, what should be your allocation now between these three bags, such that it gives you, optimizes your finances. Because all crises will be over. Okay, this was a site in Aceh. So 2004 was when the tsunami hit the sites. Look at it on the left side. 10 years later, the same sites, the grass has grown, the tree has been restored. So that is what I'd like to share with you. Okay, so because I said we like to give more time to FAQ, today I'll only go very briefly on ST engineering. Okay, this is what I shared the last time. Investment decisions requires asset allocation and asset selection. So I won't go too much into it. Okay, so the 4 types of company. DBS we went through the last time. That was a cyclical growth. And today I'd like to talk about the mature and stable companies. Okay, so you talk about cyclical growth. Decline more than usual. Okay, mature and stable is still drop, but lesser in the last crisis. Structural decline continues to drop even after the crisis. Okay, then the structural growth, that crisis is mainly just a small blip because it's grown 670% after the crisis. Okay, last time I talked about DBS. So mature and stable is represented by ST engineering. Okay, so every of this case study, I will look into all this with you. Okay, what is the last 10 years growth? A growth during difficult time. Okay, and return on equity. In fact, this is a very, I think, a 10-15 minute screen. If you want to be investing, it's something you can go through yourself to at least ensure you don't step into a landmine, and cause you heartache for your investments. Okay, and especially if you're looking for dividends, the second one will come in, a dividend yield, the 10-year dividend yield, dividend during difficult times, and last one, which is more intangible, which is industry trends. Okay, I shan't go through this. This is just I've shared the last time, which is about how the 4 types of companies, the characteristic they exhibit. Okay, so ST engineering will look at these few things. Okay, look at the earnings growth. As I shared, these are mature and stable, slow-growing company. Look at this. Since 2006 to today, it's not grown very much. Later we look at the exact number. So in the crisis, the earnings are still impacted somewhat. But it didn't decline as much. It declined about 13%, peak to bottom. from 2007 to 2009. And it took 4 years to regain its peak, pre-crisis peak. It's very slow growing, such that after 13 years, it has merely grown 22%, which is less than a 2% growth every year. I'm talking about the actual profits, not the share price. Okay? And then I'll contrast it to DBS, which I shared the last week, 2 weeks ago. Okay? So generally, the earnings still decline, but because they're more resilient, the decline is less than those of a cyclical growth, like the banks. The growth is also slower, but this is not given, because I said the right side, the DBS, the cyclical growth company, it depends a lot on the economic growth. If the economy is not doing well, in fact, it may not be growing very well at all. So ST Engineering, being a slow growing company, is up 22% over the last 13 years. Okay, ROE, which is quite decent, of 26%. The dividends over time, you can look at it again, very flat. Okay. The dividends did decline about 22% from 07 to 09. Okay, and subsequently, it was restored, and basically it's been flat. If you look at the dividends, there's no growth in dividends at all. From 2006 to 2019, it's a flat line. So don't expect much growth when you invest in mature and stable companies. Again, contrast it to DBS. Okay, so in fact, the decline in dividends was quite similar. Okay, but DBS had that spurt of growth towards the back. But for the good 10 years, it was also quite flat. Yeah, and then look at the share price, just like the earnings. So the share price is not a magical number. So if you saw the earnings, it actually increased about 22%. So the share price actually kind of followed, increased about 32% over the last 13 years. So the share price over a long term, like what Benjamin Graham said, it's like a weighing machine. It basically tracks the earnings growth. Okay, so the dividends of ST Engineering were 4.5% today. Yeah, if you think this is decent, perhaps it could be a company you could be buying in just to collect the dividends. Okay, the second part after this, I will share next time. Okay, so next time, this one is more about the industry. Yeah, because what we've looked at are the numbers. What has ST Engineering done historically? How about moving forward? How is ST Engineering affected by this COVID-19? Yeah, how is this model? Is it going to be disrupted? This one we'll share the next time round, 2 weeks time. So I hope you could stay tuned with us, so that allow me to bring you through the whole case study of ST Engineering. Okay, so thank you. With this, I'll pass back to Shireen, to be looking at the Q&A. Thanks.
Thank you very much, KV. You pass it back to me. I'm just going to share with you the question from the polling earlier on, and then the mic will have to be passed back to you, because I believe they will rather hear more from you than from me. So just now from the polling, 61. Okay, 45% of our friends today, they would like to ask you this question. How do you know when the market has recovered? What are some of the indicators that we can look out for?
Okay, thanks everyone who asked that question. And also thanks Shireen for repeating it. Okay, well, there are indicators, but indicators being just indicators. So take it with a grain of salt. Don't rely fully on it. One of the indicators I've shared with you is the economic indicator, which is we've actually done a tracking. Yeah, of course this crisis is a bit different from the previous one, but I don't think it's going to be completely out of whack. Yeah, because this time around, I think one of the main difference is the artificial effect created by the Federal Reserve by printing a heap load of money. Okay, but in the past, if you look at where this CLI behaved, CLI called a composite leading indicator, most of the time, it tends to move up or move down prior to the movement in the stock market. And this is the public information. You log into OECD, you just Google OECD space CLI, a composite leading indicator, it will bring you there. Okay, so if you start to see an uptick it starts to turn up, in the composite leading indicator, it could be well a sign that 3 to 6 months later, the stock market may move up. Okay. However, this time round, the stock market has actually moved up prior to the CLI moving up. I think a big part, as I shared, is due to the artificial pumping in of money by the Federal Reserve, which caused a distortion between the financial markets and the actual economy. Of course, secondly, what we can look at besides economic indicators are other indicators like credit indicators. Of course, that if you look at how tight the money is, in fact, even the strength of US dollar, US dollar was strengthening when the credit is getting tighter. So it kind of reached near the peak in 23rd of March, and with a quantitative infinity, USD actually fell. So the other indicator is actually the strength of USD in a crisis. Because USD, in my view, should be weakening after this crisis. So because of the huge fiscal deficits and the printing of money. But in times of crisis, US dollar play a different role. It takes on its global role, and it gains strength, an artificial strength. One of my friends was sharing with me, it could be like an Incredible Hulk. So the alter ego of Incredible Hulk is actually a very shy scientist, which is US dollar, a very weak scientist. But during times that it transferred to Incredible Hulk, it became very strong. But that's a bit artificial. That's not its usual self. Okay, so US dollar is one of the other indicator. And of course, we can look at credit spread, some of these other things, to look at the upturn in the stock market. However, I say, we can look at some of these. I just use 3 of these. There could be others. So you can look at one, the CLI, which is economic indicator. One is the strength of US dollar. And the other one, which is the credit spread, between, I can say, bonds, investment grade bond or high grade bonds, and the treasuries. Okay, so that has been calming down, ever since end of March. Okay, but besides that, what can you do is we can't fully bank on it. So I think it's still important to do like what I shared, still have the allocation, to move to higher grounds in terms of higher quality equities, some cash, some gold, or other good assets, which you may find. Seek safety in those assets. Build up your opportunity funds. And then you can use this indicator to help you get a gauge, because they may not always come true. Because I think that is the fact of life, because nobody has a crystal ball. We only have some rough gauge, which as I already said, this time around it didn't even work, because of the artificial effects created by the Federal Reserve. Okay, I hope that was a satisfactory answer for you, because I don't have the listing with me in terms of the indicators. So I just listed 3 for you to start exploring. Okay, back to you, Shireen.
Thanks, Kate. Because the second question, I think probably it has is somewhat related to what you have just shared also about Federal Reserve. Because the question is, how would the Federal Reserve's monetary policy this time round affect the valuation of stocks?
Okay, I've shared some, but I think I've got some to add on. Okay, how will it affect? Okay, firstly, the Federal Reserve mainly did 2 things. First, it cut its interest rates, from 1.5% to 0 in 10 days. Okay, that it did very quickly. And secondly was the massive printing of money. On the 19th of March, it printed a QE of 750 billion. And 4 days later, on 23rd of March, they did a quantitative infinity, which is say they will just print as much money as possible. It will do what it takes to calm the financial markets, and that worked. Okay, so I share the impact of these 2. Okay, because the question is, how will the Fed's monetary policy affect the stock market? Both has different impact. The interest rates, I shared before, interest rates is like the gravity for asset prices. So back in the 1960s, so the whole US market from 1966 to 1981, the US stock market didn't move up at all. For a good 14 years, 15 years, the stock market was flat. Can you imagine? 15 years, the stock market was flat. Why? Because interest rate was going up. Under Paul Volcker, the late Paul Volcker, the Fed Reserve Chairman at the time, He kept increasing interest rate to fight inflation. And hence, interest rate like a gravity, it keeps pulling down the asset prices. And hence, after 15 years, the asset price was stuck to the ground. This time around was the reverse. Yeah, interest rate is now close to 0%. Okay, and now there's very little gravity, and hence the asset prices are floating. I think you can use really floating as a word. Some of them are, quite far from reality. Yeah, and hence that's one effect. Of course, if interest rate continues to stay at these rates, the stock valuation could be justified. But will interest rate continue to stay at these rates? Well, that I think is quite a high probability in the short term. Medium to long, I'm not so sure. Okay, so that will be, I think, asset prices. That's why I say it is equally a risk not to invest at all. Because if interest rates stay so low, the money is just going to be flowing to this selected group of very high quality companies and keep inflating their price. So that's one. And secondly, I was just talking to one of our partners. They're from Aberdeen. And I was just talking to them, and they said, and we both agreed, when we come out of this crisis, there are very little alternative. A lot of assets are going to be uninvestable. He was sharing with me statistics. He said by Deutsche Bank, a research was showing 90% of bonds today, across all duration, has a yield of less than 1%. That makes bonds very uninvestable. It does not even beat inflation over time. And hence, all this money has to go somewhere. And I think the type of companies which I shared with you, money will gush there. So I think if we don't position some money there now, we may not get a chance. If this pullback never happened. Okay, so that is about the interest rates. Okay, that definitely has an impact on asset price. Okay, the interest rate also has some impact on the real economy, because if people spend less paying interest, they have more money somewhere else. But I think it's going to be weak because interest rate has already been low the last 12 years, ever since the last crisis. It's not like we are having a high interest rate. So I think that saving is not huge. Okay, secondly is the printing of money. I think printing of money is just buying time. Okay, printing of money won't buy growth. It's just buying time. It doesn't buy growth. If a company don't grow, just by Federal Reserve lending them a lot of money, it's not going to make the company grow in profits. So I think economic growth is going to be slow. Cyclical company, which is what I shared with you, I'm concerned. Because if economic growth is slow, despite how much money the Federal Reserve is going to flood the market, it's not going to create growth for these companies. So it creates a zombie company. They are afloat, but they're not alive. Means you look at over time, their profits is going to be a flat line, maybe even a downward trending line. Because they're not making money, they're not growing. And hence I think that is we got to know about printing of money. It's not going to create a boom in the economy just by printing money. It is buying time. It is creating zombie companies. It is reducing volatility in the stock market. It is causing market to stay afloat. Okay, all these printing of money does help. So I think that is the two effects of how the Federal Reserve is using its twin lever, interest rates, printing money, to try to buy time. And then create an artificial stock market, which is kind of diverging from the real economy. Thanks, Shereen.
Okay, thank you, Kit Wee. I hope for our friends today who actually voted for the first two questions, Kit Wee has answered your question. Kit Wee, because before I move on to now I'm going to move on to the third question, because for the first two episodes, we actually touched on like banks. Okay, we talked about DBS, and then today we spoke a little bit about ST Engineering, and then you also spoke to us a bit about Microsoft here and there. So some of our friends today, they are actually asking you a question on another sector, another industry. So are REITs a good investment now, since stock price is so low and attractive with consistent dividend given?
Okay, thanks, Shireen. I really hope everybody will stay tuned with us because I'm gradually covering all type of companies using case study, and sometime after that, I will go and revisit with the various type of companies and help you to maybe we meet together. Maybe we can study, where do they fall under. So over time, I hope through this, it does give you the ability to categorize the company. Although it's not always clear cut, but at least give you an idea. And some of these things I shared, it may not be very difficult for you to do yourself. Okay, and of course, by the fourth type of companies, I'm going to show you the structural growth companies, which I think is a very unique type of companies. And just I show with you those few companies which when they drop lesser than the market. When they rise much faster than the market. Yeah. So hence you get good returns with low risk. Now I go to the question. REITs, in fact, is one of the asset class, or rather type of equities, I would cover more in detail later on in this show. Means maybe in later part of this show. Okay, REITs. But let me give you some flavor about it. REITs are not all the same. Okay, first, let me share with you what can you look at for REITs. First, REITs are in different. Okay, REITs, again, everybody knows, real estate investment trusts. They basically invest into real estates, which are properties. But not all properties are the same. Right? We have the major property class, like the retail, which is a shopping mall. Even shopping mall is divided into prime and non-prime, which is suburban. Prime being the Orchard Road, suburban being the Causeway Point, the North Point. All these are in the suburban areas. We have the offices, commercial REITs, offices. We have healthcare, we have hospitality, the service apartments, hotels. We have the data centers. We have industrial buildings, which is divided into like a science park type of science park, warehouses. So there are different type of properties, and within each there are sub-assets, sub-asset type, and there are different quality. Even for the same warehouse, there are different qualities. So, and there are also different quality of asset managers. Some being having a lot of pipelines because they are property developers. Some don't have. Okay, some are investor friendly. Some are Draculas. Okay, so I'll say we have to be very careful. So let's look at it first. Type of properties. Even the type of properties will fall into the four categories which I look at. Cyclical growth. Let's look at it. What are the cyclical growth? Very clearly, hospitality falls under the cyclical growth. When times are bad, nobody is going to occupy the service apartments, the hotels. Okay, so they are going to be less resilient. Okay, and hence dividends could be less stable as well. Commercial is another area, which could be cyclical. Okay, I'm not so worried about cyclical. My more worry is, what if from cyclical basket they drop into the structural losers, which is the next category I'm going to look at. Because if you look at it, they are disrupted. We have the Airbnbs. They're disrupting the hospitality industry. This COVID-19 itself is disrupting the office industry. Because we don't know how it's going to be like yet. But I think one of the likely possibility is working from home is going to be much more accepted going forward. Because company has tried that, and if you don't face a fall in productivity, they are probably going to make that more mainstream. So I've talked to my wife's company, which is MNC. I talked to SME, and I think they are quite welcoming that idea. And secondly, they can save rental. So I think with that, it's going to create a demand pressure, downward pressure, for office space. And hence, I think will that lead it to be a structural decline? Well, structural decline is a one-way street. It goes down and never comes back, unlike cyclical growth. Okay, so offices could be having that risk. Retail. Retail, I think retail are usually less cyclical. Okay, this crisis is one of the outlier, because it causes this this lockdown, right? It's a very unique, but in unusual circumstance, a suburban retail is quite resilient. So it's non-cyclical, but it's a very, very gradual structural decline. Like it or not, we are getting more and more used to buying things online. The next generation will be even more used to it than people like me. I'm 43. People who are in the 20s, are going to be even more accustomed to buying things online. And hence that trend, I don't think will U-turn. So I think retail properties actually are on the structural decline. Industrial properties, because they are not very unique class of property usually, and hence they tend to be has less cyclical also. That means when times are good, supply are expanded, and then when times are bad, they create vacancies and downward pressure and rental. Okay, so that is one thing. So it's not all the same. I just wanted to point out. Dividends tend to be high. I think the good thing about Singapore is dividends are not taxed, and hence that further give higher dividend rate. So I would say perhaps look at good quality REITs, look at structural growth REITs, perhaps data center, perhaps can look beyond Singapore. So I think Keppel DC REIT is one of the data center, which I think belongs to a more structural growth REITs. Those that are doing logistic centers, those could also be more structural growth. Or very specialized logistic centers, those are actually structural growth. Healthcare, if you have a good sponsor, you have a investor-friendly REITs manager, I think healthcare continue to be quite good because they are very unique asset class, which is not easy to replicate. It's not like I got money, I can build a hospital. I need permits. Okay, so I think good places to look at. Where to be careful? Office, I think be careful. I don't know how will this COVID impact offices. Hospitality, before this COVID is over, I think be careful because if it's another wave down, they are the front line of it. Okay, industrial be selective because it's very diverse. I think logistic could be good, especially if they are very specialized. Specialized means they are very custom made, which is make it difficult for the tenants, to replicate it elsewhere. Also, REITs look for uniqueness, Don't look for assets that are unique, hard to replicate, and be much on the structural growth side rather than on the risk of structural decline. Okay, so I hope that gives you some flavor. And I touch on REITs itself, I think it's a broad asset class. A lot of people like to invest in it. But if you look at it, REITs are also quite, the share price can be quite cyclical. In the last crisis, when it's a credit crisis, it affects REITs quite badly because refinancing become a risk. So in the last crisis in 07 to 09, REIT as a whole in Singapore, the index declined 70%, 70. Okay, so this time around, I think REITs generally fall about 30%, and some of it has most of them has recovered, at least about half of them. Okay, so I hope that gives you some flavor about REITs. I'll cover that more in my later sessions. Thank you.
Okay, thank you very much, Kit V. Actually, question 4 because it's asking about US as well. So probably I thought you have shared quite a bit about US. Maybe for this question, you can share if there is any more points that you want to yet add on, because the last question is actually on SIA. Okay, so the fourth question. Okay, so maybe I share with you the fourth question first. Okay, so the fourth question, what are the chances that 23rd of March is the trough of this crisis? Otherwise, why is the market, especially US, so optimistic? I think probably they saw the plunge, and then because the market went up, so they want to understand more. So is there any additional points that you would like to add on from what you have shared with us so far?
Okay, maybe just one minor point. Okay, so I shared most of it just now. I think that point I'd like to say it's hard to say because a lot of it hinges on what the Fed is or will do, right? If they continue to flood the market like that, which is not healthy, The market is demanding a lot. Yeah. So the Federal Reserve is today, okay, don't blame me for the word. I think it's a bit of a puppet. It's the puppet of the market. Yeah. So gone are the good old days of Paul Volcker. Paul Volcker, he did what he felt was right for the market. Yeah. So the Fed has a stand at the point of time. Today, the Fed has got little stand. It basically bow to the market. The more the market wants it to do, it does eventually. The market, the president, yeah. So it is a lot of political pressure on the Fed, yeah, although they always say they're independent. So I think the Fed said they will do a lot, yeah, because, yeah, so how far will they go? That is a question. So there are two parts to it. Secondly, will there be the second round? Because if it does, the economy is going to be much worse, yeah, than where we have been and where we are. And if there's a second round, what will the Federal Reserve do? All these are unknowns. Okay, so I said I can't give you an answer whether we will visit the March 23rd low, because it depends on these two things. Whether there'll be second round, yeah. If it does, it gives us a much higher chance of revisiting that. Yeah, and then if they do, what will the Federal Reserve do, and how effective? Because they have, I would say, really dished out their bazooka. Of course, they say that they still have a lot of weapons, but I guess the Fed, they are trying to use the rhetoric, right? Because they hope they won't revisit it through strong words, yeah, by saying, they'll do whatever it takes. They still have a lot of tools. We really don't know how full or how empty is their toolbox. How effective are their tools? Okay, so I think just like you, I don't think I have any other better view. Yeah, I can share with you, those are the levers, those are the factors. How will it turn out? I don't know. So we really need to have a strategy. Yeah, like what I shared, that was my strategy. I hope you have yours too, such that we don't end up to be in a huge distress, emotional distress. Yeah, if something like that happens, yeah, like the tsunami comes back. Yeah, we hope that we won't be caught. We are already at the high ground. If it happens, it happens. Yeah, we are prepared, and maybe prepared to capture the opportunity as well. Yeah, Shirin, that's all I have to say.
Thank you very much, Kiwi. Kiwi, the last question. Because Singapore Airlines has been the pride of Singapore for many, many years, but this COVID actually impacted SIA a lot. But of course, we have seen from the news, I think from starting from June, July, they are going to start flying to some countries. So what is your view? What is Unicorn's view on SIA's investment outlook?
Okay, maybe I'll show you SIA's chart. Give me a while, show screen quite fast.
Okay, sure.
Maybe and I show you the chart, you probably have an idea yourself.
Okay.
Advise yourself. Yeah.
Because I've heard a lot from people around me about SIA as well, and then my husband, he's with SQ, so he was also asking me. He said, "Hey, should I invest in my own company?" So what I told him is that if you want to support your company, go ahead. If you want to invest in it, probably you need to hear more. And I think he's here today also. I hope he's looking at the chart at the same time.
So this started in 07. Okay, 07. So this is the max. Of course, SIA didn't start then. Or if you want to look further back, you can probably help yourself to read. Okay. Would I invest in a company like that? That is, in good times, it stays flat. In bad times, it goes down. Would you like a company like that? Yeah. So this is the share price of SIA. Okay, cyclical companies tend to be like that. So you can see it might look attractive. Today it's up 5%. Okay, so if people who like to be a bit opportunistic, capture some of this 5-10% gain, yeah, it could be excitement. Yeah, excitement. Oh, I catch a 5% gain in SIA. I caught a 20% gain in SIA. Okay, and I think maybe it serves just that purpose. Yeah, for you to gain a bit of excitement, a bit of extra money. Yeah, but such are the companies. If round 2 come, it's going to drop more than the market as a whole. Yeah, but when it rebounds, it's going to rebound less, and there are fundamental reasons to it. Firstly, it's an industry with poor dynamics, extremely competitive. Yeah, no low competitive advantages. Yeah, and then now facing the prospect, in my view, yeah, this COVID has altered airline industry. Yeah, so I think we are probably going to have a temporary, a permanent, I would say, downward shift in the chart. Yeah, for example, in terms of airline demands, because of these two things, because of working at home. So I think global business travel will reduce because companies think that, I mean, they're getting used to meeting on Zoom, and that saves so much time. I just open my Zoom, I talk to my counterpart in US rather than flying there. So I think that's going to be one. And of course, the gradual shifting of supply chain. I think with this, one thing corporate will do is they will shift part of their supply chain closer to home. Because they will price safety. They may create redundancy rather than just going for efficiency. And when supply chain are closer to home, traveling are also lesser. Okay, so there is also a permanent headwind. And we don't know whether round 2 is over. So then I think, will I invest in SIA? Likely, if I'm not going for that temporary bounce, 10-20%, unlikely I'll go for this type of companies. You just contrast against, I just use Microsoft, which is what I always use. Look at this chart. You look at Microsoft chart. Which chart? Imagine if this is your fortune. Which chart will you prefer? The first one or the second one? Of course, sometimes when it's when markets are getting better, the economy is getting better, companies like Microsoft will temporarily rebound less furiously than SIA, right? Because you saw SIA is up 5%, but that is usually a very small period of time. For majority of the time, maybe 98% of the time, Microsoft is going to do better, in any given year than SIA. So I think that's my view. Don't try not to. I think we always have this mentality of bargain hunting, price versus value. A lot of people only look at price. This SIA used to be $12, now only $4. But what if its value has gone from 12 to $1? And the price has only gone up from 12 to $4. So it may not be any more attractive just because prices has gone down. Okay, because the SIA is quite a common company. I may also use it as, I've not decided, I may use it as one of the case study later on in the session as well.
Okay, thanks, Kitwi. Thank you very much. That's the end of our Q&A session. Thank you very much for staying on with us because the time now is 9:12. We have actually captured the questions asked today. And like I mentioned earlier on at the start of this episode, we will consolidate all this question, and then for the next session 2 weeks later, we will actually be posting. Okay, we'll be answering the questions that you have posted for today. But we may not be able to answer all because usually how we choose, right, is that we will choose the question that is of concern to more people. So seek your understanding in that. So we have come to the end of our Grey Rhino show for today. I'm just going to share with you the next session. Okay, just give me a minute. Okay, our next session is going to be held in 2 weeks' time, as usual. So, okay. It's going to be on the 17th of June, 2020, Wednesday, same time, 8 to 9. So if you want to attend, that means you already have your schedule now and you want to attend the session in the next session, right? Episode 4, you can scan via this QR code. And then at the same time, because we understand that quite a number of you are really our every episode supporters. Okay, so we want to make things easy for you so that you do not need to register for every episode. So we have this subscription system. Okay, later as you leave this room, you will see an icon, okay, that says continue. So when you click on that, it will actually lead you to a feedback form. So we have added two things in the feedback form. Firstly, if you have any question still, let's say if you missed keying in the question just now, you can still key in the feedback form. It will be considered as the question asked today. So we will try to address it in the next session. That is one. Secondly, you can opt to be our regular subscriber. So if you choose this option, the Zoom details will be sent to you automatically for every episode. You do not need to register it again. So for those whom you know that, okay, you want to do that, you can just choose to be a subscriber. Okay, but for those who do not wish to be in this list yet, okay, you want to confirm your schedule on an episode basis, you can just scan this. Okay, thank you very much for today. Hope you have enjoyed the session so far and have a great week ahead. We will see you soon. Bye-bye.